maybe I must start by introducing myself. I'm Gideon Rossouw from Nedbank, looking after Web3 enablement. Rob is in...
Good afternoon. Rob Downs, part of the digital assets team in ABSA Corporate Investment Banking.
Cool. Nick, we had to bring somebody that will spice it up a little bit and sort of create a bit of culture for us here. So we asked Nick to sort of fill that route.
Hello. My name's Nick and I'm here to cause some shit.
And then we needed to find a very late sort of replacement for our Standard Bank representative, and we replaced him with Rikki from FNB. So very impromptu, not rehearsed, so anything that you ask him is really sort of off the cuff. Cool. So I want to start off quickly to sort of give everybody just the opportunity to quickly sort of introduce themselves. Nick will sort of start here and go down the road.
Not that it's very important. My name's Nick French.
Lord French.
I'm a lord. I bought a square foot of land in Scotland and ask Amex and Investec. It's true. I'm here to just be a cat amongst the pigeons and challenge the banks to enable every single one of us. And I say us, not these oaks next to me. Us. That includes everybody except the banks. Us. Challenge the oaks.
Good afternoon again, Rob from ABSA. Been in banking for 20 odd years and now looking after the digital assets team in corporate investment banking in ABSA. Rikki?
Thank you. Story is very similar to Nick's. Very similar to Rob's, not Nick's. I wish it was similar to Nick's. And I guess challenge accepted.
Cool. So I think for us to just quickly set the scene in terms of what we want to do today, I think normally when we get to these sort of conferences, the general topic of the conversation when we start talking about stablecoins is what stablecoins is going to be and how it's going to change the world and how it's just going to be this sort of next sort of end-to-end sort of settlement framework. So we started or thought that it's maybe a good idea to just try and bring a little bit of a different perspective to the context. When I started sort of thinking about this and started preparing for this, I think there was one topic that I started resonating in my head, and it's sort of the first Spider-Man movie that was sort of produced, and effectively Uncle Ben that was sort of telling Spider-Man this whole statement around with big power comes big responsibility. So I think the context is for us today to sort of just start thinking around a little bit what is really the context behind regulators, what is the things that regulators are concerned about. And I think one of those things are, the reality is if we look at the crypto industry, if we look at the sort of crypto markets, even the big players, so even the Binance, if they were to fail today and go bust, it's not really going to have much of an impact on the global economy. The economy will continue to operate. They're still just a very small blip in the bigger picture right now. So regulators are happy at this stage to sit a little bit back, give the guys the opportunity to sort of play around, develop, sort of grow, and learn in the process. However, for us as banks, the picture is a little bit different. If we sort of get involved in a crypto technology in a new sort of context, and something goes wrong because we don't understand the risk, because we're not dealing with things properly, and a bank fails as a result of that, the economy is effectively going to be seriously impacted by that scenario. So it's about applying the right level of control to the impact that it could potentially have on the ecosystem. And that's the way that regulators are looking at the world and the sort of frameworks that we're sort of involved in.
Question? Excuse me, I'm just going to interrupt our man Gideon mid-speech. I'm going to challenge you, Gideon, my good man. I'm going to challenge you with a question. I respect your position as a bank, as an institution, as a protector of us. What I will say is that crypto is not a it's not a good term at the SARB. Crypto is a bit of a frowned upon term. In any industry, go to any enterprise, Fortune 500, go to any corporate, crypto is frowned upon. And I say that because the banks have been too cautious for too long. And we are all sitting ducks as a result. What do you have to say about that? And I'm sorry for putting you on the spot.
Yeah, so I think it's part of the conversation around it. I mean, if you think about it, I was sort of expecting Nick to sort of come into the context. And the reality is that the banking system has failed. The reality is that if you look at what happened in 2008 with the financial crisis, this whole regulated framework that we have, this whole thing that we say that the regulators and the banks are there to sort of protect the economy, it failed spectacularly. And I think the reality is that as a result of that, we have new regulations, a new context that was created in the form of Basel that is trying to prevent that from happening again. I think crypto is something that we're trying to still get our heads around. We're not really sure what to make of it. So it's something that we're busy learning, and unfortunately it's a big ship. It's not something that we sort of just turn over a bend. So I think the other part of it is that if you think about sort of a success story around regulations, if you think in terms of what happened in South Africa in 2008 when that financial crisis happened, South Africa actually had already existing processes around reserve management. The banks in South Africa were one of the only countries in the world that actually required the banks to keep reserves for the deposits they had for clients. And the impact that we had in South Africa for that financial crisis was way less than anywhere else in the world. So the reality is that the regulations makes a difference. The regulations are needed. But the reality is also that it takes time. It's not things that we just change very quickly.
I personally lost my job in 2008. So I don't feel that love from the banks on your fractional reserve lending model. I'll just say that.
I'll take your point from there. So I think what we want to do today as well is, we don't want to create this picture and try and sort of absolve the banking community around what's going on and sort of what is happening. So, Nick, we sort of started our conversations and some preparation around this, and you had quite an interesting sort of challenge for us. So do you want to position that for us?
I think this is actually quite important for all of us. I'm literally just a pawn, a vessel, a messenger. I believe the banks, 1, 2, 3, and we're missing number 4, I don't know where they are, of the big 4, I expect you to work together. And the challenge that I present to the banks today is utilitarian simplicity for business and customer. That's simple. I don't want anything else. I don't want a credit card. I don't want a mortgage. I don't want a car loan. I just want simplicity across the banks in a libertarian order of money. I went to the bank the other day and I asked for a large portion of cash. I wanted to buy something. I'm not going to tell you what it was. It was furniture. But the bank asked me, what do you want to do with this cash? And I told them to fuck off. It's got nothing to do with you. It's my money. Excuse my language, but bollocks. It's got nothing to do with you. It's my money, and I've entrusted it to you. So, my question is, to this forum, to every single person here, how can we get these guys, their executors, their shareholders, to stand together, to work together, to formulate a policy that enables the blockchain, that enables the future, and that actually spurs on a new industry of which we are all beholden and intricately connected to. And I want to challenge that, and I'm going to present you with one question. Africa, doesn't matter where you are, we've all got a problem. It's a 3-letter acronym. It's called the ANC, the ZAR. The ZAR is very weak, and we are all hedging our bets on the dollar. Africa runs on the dollar. I don't care who you are. Wherever you are, Nairobi, Ghana, if you're in Victoria Island, if you're in Johannesburg, we all rely on the dollar. I don't care what your view is on the dollar. Today, we exist on the dollar. How do we get an Africa stablecoin adopted by the banks, enabling the PSPs, enabling business and individuals to hedge their risk? I'm going to challenge the three of you guys to give us an Africa stablecoin. Thank you.
So Rob, I'm going to drop the ball on you.
Amazing. Thanks, Gideon. It's a great challenge. So I think you touched on maybe one of the keywords earlier. You said we have to work as an industry. And I think we say like, Gideon, you mentioned the banks have failed. Maybe the banks have failed. But I think as an ecosystem, I think there's a much broader ecosystem than just the banks that have to work to make something like your vision a reality. Your vision a reality. Thanks, Nick. I think you've got to have the commercial banks, the central banks, the lawmakers, the regulators, all have to work together to create some standards, some consistency in how to operate across the ecosystem. I think that is incredibly challenging. I think we all know that. For those people that have worked in a bank previously or do still work in a bank, it moves a lot slower than a lot of the people in this room would like to operate. And I think that's our big challenge, actually, is how do we get that ecosystem to continue to work together, and we are working together. I mean, I think there's some positivity. It's not moving perhaps at the pace that we'd like, but we are working together to create those standards, and I think that's a big part of the solution.
It's not working. Just on a point of clarification, when you say an Africa stablecoin, you mean a USD-based stablecoin? Okay. I mean, there's a technical challenge, and I think it's imminently doable. The question is, what sort of adoption are you going to get, and what purpose is it going to serve, and who's going to use it ultimately? Will it serve the purposes of the people? I'm not so sure about that. But I mean, there are other examples of currency blocks around the world, non-crypto, where things struggle to work properly. Let's take the euro as an example. And there are various spheres that a currency has to operate across, whether it's political, whether it's monetary, whether it's fiscal. And you see these diversions in different countries along those three dimensions, and it makes a unifying currency like the euro even difficult amongst a group of countries that have a very strong affinity and high degrees of trade between them. So to consider a single block, the entire continent of Africa, and want to superimpose a currency, whatever it's denominated as, is, I mean, it's utopian, but it will probably end up being dystopian. So I'm not sure. I'm not sure whether that's the way to solve it, and more problematic for me would be the fact that you denominate it in USD, which means you continue US hegemony, which is, I don't know. You make up your mind if you want to do that.
Question, teacher. Sorry, I haven't had my word of the day. Dystopian, utopian, it's big words. I'm a simple man. But everybody here, I can probably guess, maybe with a show of hands, who's got a USDT, USDC somewhere, bit of interest. We dollar cost average. That's what we do. The euro, fuck the euro. I hate the dollar, forget the States. We dollar cost average today and yesterday. I'm not talking about tomorrow, I'm talking about yesterday and today. Business here, dollar cost averages, I don't care who you are. Your Bitcoin portfolio, your Nigerian fintechs, I don't care, they are all dollar cost averaging. So the point is that we need a yesterday solution today that is going to enable business and the individual. Now, the individual, we've spoken, currency hedging, it's great. Let's talk about CFC accounts. You all offer them. The man on the street, it's very difficult to get one. I mean, I struggled for, a long time. I have one with RMB. It took me a long time. But I also managed to set up a few dollar wallets in a matter of minutes. My point is, and I hate this word, and I'm going to use it very sparingly, and I'm going to say it once, that bollocks called financial inclusion that everybody meanders about, strike it off the roll. But accessibility, so dollar accessibility is important. I've got friends today in Soweto running the Hyper Fund. 180,000 active users, contributing in dollars, ramping from cash through spaza shops, through friends, through quarter flippin' sellers to get dollars, to participate in this fund. My question is, we need it today. And I'm going to just say it, like USDA, it sounds sexy. Started in South Africa, we take it to Sub-Sahara. We can do it. You need to just close loop, so we can't send all our money to Binance and stick it on derivatives. 2, we need to cap it. You need to build risk profiles with legacy banking systems. You have those in place. So we're not going to leak money. And 3, you have everything else to close that loop. Excuse me.
Yeah, so I think I must say there's one thing that I very much agree with Nick on. I think the expectation that we're going to be able to decouple from a US dollar as a measure is unrealistic. We can stop using the physical US dollar, but you need something that you can value that is a common thing in all cases. So whether you use XRP or whether you use a Bitcoin or whatever, you need a linear stick that you can effectively go and value those assets with and exchange it at something that you can interchange those values with. And US dollar is probably going to stay that for the foreseeable future. So I do agree with Nick that the idea of decoupling from a US dollar, yes, maybe it's relevant that we don't physically need to go and buy the US dollars to actually transfer across border. But as a measuring stick, we'll probably be stuck with a US dollar for a long time to come. I think the other thing that is quite sort of interesting in this context is that there's a mind shift that needs to happen. And I think context that we talked about in terms of we need guidance from regulators. We need regulators to sort of help us and support us in this process. But at the same time, I think as banking sort of partners, we have the ability to develop solutions. We have the ability to come up with ways that we can actually deploy these instruments with the existing regulations. So we need to go to the central banks and we need to go to the regulations with solutions and models and mechanisms that we can show them that we can actually manage the stuff, that we actually can use this technology and we can control the process around it, and we can protect the people that are actually investing and using these things along the process. And I think for too long we've been sitting back and waiting for regulators to change regulations. I think we need to become a little bit more proactive and come up with solutions that actually go to the regulators and put a recipe in front of them and say, here's a way that we can possibly do it. Come and have a look at it. Come and help us to actually tick the boxes. Let's close the holes that maybe are in that process and make sure that it works. So I think that is a big part of the things that we're talking to Rob and Rikki and the guys from the different banks about. So there are things that are happening sort of in the back end around these sort of things. I don't know, Rob, Rikki, is there something you guys want to add before we ask a few questions from the audience?
I think there's still something really important about getting our regulatory certainty more clear. I think innovation is really great where there is grey areas, and I think as banks, what we really like is pure clarity. And I think there's been a lot of positive movement, especially in South Africa, around declaring CASPs as accountable institutions and declaring digital assets as financial products. And that gives investors and consumers some protection. But it doesn't, if we talk about stablecoin in particular, it doesn't create a pure, clear set of guidelines for all participants to operate in. I think it allows the innovation, and that's amazing. But we're now probably at a stage, or my sense at least is, we're now at a stage where that innovation is running really fast. The traditional institutions like us aren't able to run as fast. We've got small teams working in organizations, and I think that's a really positive step, that we are all participating and want to participate. I think what we struggle with is the vast array of people in our businesses that want to see the guideline. And that's understandable, right? Your opening statement, we can't jeopardize the fiscus, the economy, the license. So I guess my closing comment is that there's lots of really positive steps coming from the banks. I don't think as banks we're moving at the pace you want us to move, and I think all of you want us to move. But I guess my maybe the leaving point is there's some really amazing people in all of our institutions trying to push this agenda forward within our banks. And I think that will be to the benefit of everybody ultimately. I guess we just need to do it within some confines that perhaps you all don't think are important, but I think we think is important. I think is important.
Yeah, I think for a long time, banks were involved in regulatory-driven experimentation, and that's great. I mean, I think there's some smart people in that space, but the pace is really slow, and it's probably time to move to a point where there's greater agitation from the bank side, but also a move towards less regulatory reliance. So some sort of public-private partnership where we are advancing the topics and we give the assurances to the regulators that, you know, we're gold standard and that moves forward.
Hello, hello. Look, it's always awesome to see great, smart people from the bank standing up and putting their names on the line to get shot by the Saab and your next BASA meeting. So good luck to all of you. I want to speak quickly, Nick. You mentioned why don't we have a dollar instrument? The person on the right there, Rikki, I think I'm asking the wrong question. The man is coming for me. Mr. Rikki, you guys are the most advanced bank when it comes to accessing dollars in the world. What are you allowed to do with dollars? Because you don't actually open a real dollar account. Your accounts are through Citi, and it's a corresponding banking structure. And you guys are all here arguing about how the banks is excluding us from the payment system, but the entire continent is excluded from the dollar system, and even our great banks don't have the right to clear and settle US dollars themselves. So, Rikki, what is it that we're doing as African banks, specifically RMB, that's pioneering clearing in Africa of dollars to make dollars more accessible to the world? And why aren't we using this amazing blockchain technology that Nick is talking about to drive this forward?
Really? Toby. So I don't think I have the expertise to answer that question. Yeah, I'd be lying if I did. I don't know if I agree with the way the question was phrased. There certainly are dollar restrictions on the continent. There are issues around liquidity, and there are government-imposed controls on capital. And that is a real problem, and that's where stablecoins can bridge the gap, absolutely. But many of the stablecoins that are stepping in there are backed. I mean, with the exception of USDT, I understand the dominant stablecoin, but still. With the USDC, there's still a dollar sitting in a Delaware-registered entity, and that money is in the US and is subject to the same controls as effectively a system that's using the correspondent banking network. So yeah, I do feel like blockchain could conceivably plug that gap, for sure. The question is, at what cost does a bank stick its neck out and try and, you know, undermine or at least subject themselves to regulatory scrutiny? And yeah.
Common knowledge. But you guys have been working for 4 years with the Fed to get the permission to do what you can do today. And I don't think anybody realizes how hard it is to move dollars. And this is something I just want to convey. Our banks are actually representing us on a global economic level. And the regulations that prevents them from opening a dollar account for a user doesn't come from South Africa. It comes from international regulators. And there, they have very limited representation. So, Rikki, sorry for ambushing you on that question. It wasn't meant to put you on the spot. I just want to demonstrate how hard these guys on the stage are actually working to represent all of us. And it's not all gloom and doom. These guys are working really, really hard.
Yeah, I mean, maybe just on a point of clarity, when you're moving from one currency to another, for the most part, 90-odd% of the time, you're going through the dollar. Any dollar transaction has to be cleared through the Fed. So there's no escaping the US, and yeah, I think it's misunderstood.
Okay, guys, I hope that sort of creates some context for people. Sorry, it seems like there's
A quick,
I'm going to overrun, sorry.
well, it's a quick question. I get the sense that the banks are more interested in working on a programmable central bank coin in South Africa than actually enabling Bitcoin or any other cryptocurrency.
I think to some degree you're probably right. And the problem is that...
Which then gives a certain amount of control, which is definitely not what I want to see.
Yeah, I think the flip side of that is that for a lot of these crypto assets, so Bitcoin and Ethereum and all of the assets that you have, there's a huge amount of risk associated with that. So, I mean, yes, for the majority of people that are sitting under this tent at the moment, you know how to deal with a wallet. You're familiar and comfortable with dealing with technology and dealing with that context. But 95% of the people out there is not able to do that. They're not able to control their assets in a secure and trusted way. And unfortunately, you get to a point where those people's assets are going to be stolen, and when it's stolen, it's gone. You can't do anything with it because it's anonymous. There's no way for you to actually, yes, you can maybe go and freeze the assets, but you can't get the asset back to the client again. So, yes, there is a context with the stable coins and things that we're looking at where, yes, it is a context where we want to control it, but the benefit of it is that if somebody actually commits a crime to get access to that coin, we can actually go and destroy that coin and pass it back to the person that actually originally owned it. So there's a lot of controls and benefits and mechanisms that we can build to protect the bigger economy and people in the ecosystem. So it's a matter of sort of playing around what is really the benefits of using a crypto or a crypto asset and understanding the risk that it poses for 99% of the population that's not technically savvy enough to really deal with it properly.
But Gideon, this is just a follow-up on that sort of question. That's an argument for information and education and not an argument for restricting access. So what you're saying is people are uneducated, fair, but what you're also saying is, like, you're removing the accountability that exists on us to provide that necessary education in order for them to be exposed to financial instruments. Otherwise, they'll never have that access, right? So if we all acknowledge that digital assets have the ability to, revolutionize finance in general, there's an impetus on us to then provide that education so that that direct access is there. I just don't believe that that's a direct answer to that question.
I do agree with you to some degree, but the reality is that that takes time. To educate people to a point where that becomes a reality is going to take a huge amount of time, and we need to sort of use this technology a lot sooner.